Hello, I'm Franita Neuville. In today's world, asset managers are looking for new ways to generate alpha. And one of these ways is through looking at sentiment analysis. We are joined here by the CEO of MarketPsych, Richard Peterson, who's going to be telling us more about MarketPsych and their sentiment analysis tool. So Richard, can you please tell us, what is MarketPsych?
So MarketPsych is a set of aggregated news and social media-based sentiment indexes. The way we do that is we look at the top 2,000 global news sources, and we look for references to tradable assets like large stocks or currencies or commodities. And we score how people refer to those assets, and whether they have a positive tone in their text about that asset or whether it's a negative reference to that asset. And we create a time series of that positive negative balance so that we get something like a price index where people can look at, users can look over time and see the negative or positive swings in how people are referring to a given asset. So that's really what a sentiment index is, and in our case they're aggregated from all the millions of references a day from news and social media to the major tradable assets.
Right. So what are these sources that you're using? What kind of sources are you using for this?
So in the news media, for example, we use the top 2,000 global news sources. These are the ones with the most external links to them, as ranked by Alexa. And so the social media sites are financial or business-related social media sites where people discuss stock trading or business issues, or sometimes industry sites like commodity trade websites or forums. So we're scraping that information, and then we're using that, again, through text analysis, natural language processing, extracting what we find to be the meaningful sentiments, but also emotions and themes that people are referring to in those boards.
Okay. How often are these indices actually updated?
So we publish out the data every minute, every hour, and every day. So we have different types of averages that we push out of this data. We have clients, though, who use it from very short-term signals on the minutes level to all the way up to months level, to monthly asset allocation decisions.
Right. And what type of clients actually use this information, and how do they use it?
So we do have clients from the very short-term machine-based traders all the way up to large asset allocators like pension funds and insurance companies who are using it for larger asset allocation. So there's a number of techniques that people use when they deploy the data. The big picture with this data is people are trying to either predict the future or avoid downside volatility or improve their returns, say, through finding better opportunities or investment ideas in the markets. So we see this data used in research applications. So we have a big US bank that deploys it internally to improve their research process, to identify which stocks are likely to outperform, for example. Also, Empirical Research Partners in New York, another research firm, uses it for a similar purpose. They augment their quantitative models. So they have traditional factors like value and momentum that they know tend to drive stock prices higher in the short and long term. And then they add in sentiment analysis because they find that even at the long term, sentiment analysis provides a very useful signal that's different than that provided by other sources like traditional quantitative factors. So we have the quantitative users, the research users, and then we have some government agencies who use it for risk and compliance monitoring. We also have funds, big banks and funds that use it for more quantamental or discretionary decision making. So they'll create stock screeners or combine different types of data to create signals that they use to inform their decision making. And then we also have brokerages as well that use it for short-term signaling for their clients, selling them or providing them signals to improve their trading accuracy in their trading.
Right. So it certainly sounds as if you have a global client base. Globally, what does your coverage look like, and also across asset classes? So from a country perspective, what does the coverage look like, and then also if you can give us a little bit more insight as to what asset classes you cover.
Yeah, great question. So we cover every major asset class. We cover 15,000 global companies, 36 commodities, 45 currencies, 170 cryptocurrencies. Also, stock indexes globally and sovereign bonds. We cover 62 stock indexes and sovereign bonds, as well as interest rates for 62 countries.
Okay.
So we have a lot of global macro coverage, including for countries. We have many macroeconomic indicators that we're extracting from the text, like consumer sentiment and budget deficits and references to monetary policy expanding or contracting. So we have many interesting and complex themes that we're extracting from the text in these groupings.
Wonderful. Thank you, Richard, for telling us more about MarketPsych
My pleasure.
and joining
Thanks.
us today.